So topic of the day is fire insurance. Fire insurance is not a new product to you now. Lot many sessions have already been done. But still, to refresh all these things, it is required that we should keep on refreshing all those policies which we have already read. So let us have a quick refresher. As of date, 3 fire insurance policies are there for commercial institutions. One is Bharat Sukshma Udyam Suraksha, Bharat Laghu Udyam Suraksha, and Standard Fire and Special Private Policy. So the Great Fire of London, you must be remembering, between 2nd September to 5th September 1666, that destroyed the houses of 70,000 out of 80,000 of the city inhabitants, consumed 13,200 buildings, 87 churches, and most of the city authority buildings were destroyed in that. So then the fire insurance picked up. As far as fire insurance is concerned, all the basic principles of fire insurance or general insurance are applicable to fire insurance. For example, principle of insurable interest, utmost good faith, proximate cause, and indemnity. Principle of indemnity is applicable along with its both the corollaries, that is subrogation and contribution. So as far as the subject matter of fire insurance is concerned, buildings, plant and machineries, furniture, fixtures and fittings, goods may be in any form, that could be in raw materials, semi-finished or finished stocks, is covered. Fire plant present inside as well as outside the building. They are all subject matter of fire insurance and they are insurable under the fire insurance individually or collectively. So, with the introduction of these 2 policies, IRDA made significant changes in the coverage, some insured, and additional coverage, innovative coverage, with a slight difference between these 2 policies. So, as far as the fire is concerned, in insurance parlance, fire means the production of light and heat by combustion or burning. There is said to be fire within the meaning of fire insurance when there is actual ignition, fire is purely accidental, or there must be something on fire which ought not to be on fire. Means these 3 ingredients make the word fire, which is covered under the fire insurance policy. But this hazard is a big one across the globe, because fire is a self-sustaining process of rapid oxidation of a fuel. And 3 things are required for fire, that is fuel, oxygen and temperature. But anything could be the subject matter of fire. Means fire can ignite in anything. It could be solid, liquid, vapors and gases. Solids means anything like board, fabric, synthetic material, packing material, paper, etc. Liquid means flammable liquids or other sources of liquids. So when it is talked about the fire insurance, fire doesn't pay for those losses only which are caused by the ignition. At the same time, the damages caused by smoke, water, damages done by firemen in executing their duties, losses incurred by insured in attempting to check the progress of fire, damage to property during removal from a burning building, because these are also part of the process. None of them is separate. They are in connection with the fire only. So they are all payable along with the fire losses. Now the question is, who can take the policy? whoever has the insured interest in the property can take. For example, owner, shopkeeper, educational research institutions, hotels, manufacturing firms, godown keepers, bailey, lesser, lazy, banks, financial institutions, traders in stock, trustees, charitable institutions, transporters. They all are having the insurable interest in the buildings, properties, and the furniture fixtures. So they can take the fire insurance policy. Now the question is, since the introduction of these two policies, a lot of things have got changed because the IRD has taken the steps to improvise these two policies. In the sense, the language have been simplified because earlier the language was very complex. Coverage was not complete, so coverage has been enhanced by including inbuilt coverage. Mis-selling has been stopped because no peril can be deleted during the currency of the policy. Coverage is more clear now, it has more clarity. And the pattern of deciding the sum insured has been decided. So basically IRDA did a lot of good efforts to provide these policies. And now, maybe either the fire policy is given in isolation or it's a compact policy or package policy. The fire section will act as per the parameters decided, and the parameter is sum insured that will decide if the sum insured is up to 5 crore rupees, that is less than 5 crore or up to 5 crore. Bharat Sukshma Udyam Suraksha policy will come into picture. The moment it is exceeding 5 crore, up to the sum insured of 50 crore, the policy will be converted into Laghu Udyam Suraksha. If the sum insured is still exceeding 50 crore, then the policy will come into force to be standard fire and special peril policy only. There the coverage is the same old one. There is no change in that policy. So anything related to the industrial risk or non-industrial risk, storage risk, maybe storage in open or in godown, utilities of tank, these are all occupancies of fire insurance policy. Among the major changes, number of perils were increased in these policies from 12 to 14. Deletion of peril was stopped. Sum insured decided to select the appropriate policy, that is up to 5 crore, Sukshma Udyam, and over 5 crore, Laghu Udyam. Over 5 crore means up to 50 crore. Compulsory excess is also decided. In Sukshma Udyam it is 5,000 on each claim. In Laghu Udyam it is 5% of each claim, subject to minimum 10,000. In case of terrorism, it differs. So the minimum premium is also different for both the policies. Sukshma Udyam 500 plus GST and Laghu Udyam 1000 plus GST. As far as the definition of the perils are concerned, 3-4 definitions were changed. Say for example, the first peril, fire, which was not having the coverage of own fermentation or natural heating or spontaneous combustion. Now they are made as inbuilt perils of fire. No additional premium is required to cover it. Bush fire also expanded to cover forest fire and jungle fire. Impact damage will also cover the aircraft damages. 3 new perils, terrorism, earthquake, and theft are included, but the theft would be in the limited sense. If it is followed by any other peril, then the theft risk will be covered. This is confirmed now. No general insurance policy of any general insurance company under these two, Sukshmuddam and Laghuddam, will delete any peril. No peril can be deleted. Right from the day 1 to the expiry date, all 14 perils will continue. So these were the 15 add-on covers with the standard fire and special peril policy. They are still there with the standard fire and special peril policy. And they are all available on the payment of additional premium. But with these two policies, that is Sukshmuddam and Laghuddam, they are merged. Now they are becoming inbuilt perils. No additional premium is required for them. So if you say individually, inbuilt coverage will provide the enhanced limit of consulting engineers and architect and service engineers fees to 5%. Removal of debris, enhanced limit is 2%. Other add-on covers which have been merged into these policies are additions, alterations, or extensions, temporary removal of stock, cover for specific contents, startup expenses, cost compelled by municipal corporations, stock on floater basis, reloaded software, stock and interest. Now they are all inbuilt covers and no extra premium is required for them. And they are automatically covered with certain stipulations, that is the highest limit. Question is, this floater basis is inbuilt cover only in the Sukshmuddam Suraksha policy, not in Laghuddam. That means cover for stocks at multiple locations under one sum insured is available under Bharat Sukshmuddam Suraksha policy without any additional premium. But in Laghuddam Suraksha policy, loading will be charged for that. For calculation of sum insured, now there is a standard pattern. The sum insured will be decided on the basis of reinstatement value for the properties, and the properties includes building, plant and machinery and furniture fixtures. For any kind of industry, factory, SME, corporate, these buildings, plant and machinery and furniture fixtures will be part of the property. But for stock, that could be raw material, stock and process, finished goods. Am I audible to all of you? Anybody can confirm? Am I audible to all of you? Or is there any break? Can you hear me? Okay. Good. So for the stocks, there could be different values for some insured, like for raw materials landed cost, stock and process input cost, finished stock manufacturing cost. These are purposely decided because the value of the stock will differ under all these three circumstances. This would be the standard method of deciding the value for some issue. And for the bullions or precious stones, only the agreed value will be taken into consideration. Agreed value means the value agreed between the. What happened? Can you hear me or not? Am I audible to all of you? My voice is clear to you or not? Anyone? Yes, Mr. Shashi Bhushan has raised a hand. Mr. Gautam, can you hear me? My voice is there clear? Mr. Gautam, just unmute yourself. Am I audible to all of you? What is wrong? Why nobody is replying? Anybody can confirm if my voice is clear to you? Is there any disturbance? Shashi Bhushan. Kashik. What happened? Okay, I'll continue. So the property are insurable on the restatement value. The restatement value has to be understood very clearly. Kapil, my voice is clear to you? Kapil, Mr. Kapil Jange? Unmute yourself. Mr. Kapil Jange, can you hear me? No. Can you hear me? Not audible. Okay, I will reconnect. So let us see why there is a disturbance, because this connectivity is hampering, and now this is connected. I am rejoining, don't worry. This will function properly, don't worry. Is it okay now? Can you hear me? Okay. Good. So see, since the properties are insurable at the restatement value only, so let us understand properly what is restatement value. This is the value at which the property can be reinstated or replaced on the date of loss. There could be a difference between the date of loss and date of insurance, but the property will be assessed and valued on the date of loss, and on that day it should be for full value. Otherwise, the under insurance clause will apply and that will reduce the loss proportionately. In that case, the insured would be the loser. So that situation should not be there, because the goods, if it is sold, the insurance company will pay the claim on the contract price basis. Contract price is the price that is at which you have sold the goods. So that is payable if the goods is sold but not delivered. That means your goods has been damaged by any reason because it is not delivered to the buyers. So if the insurance is there, you will claim from insurance company and insurance company will pay the contract price. That means full loss is paid. Now there are 4 innovative coverage in this policy, and these are in addition to the basic fire coverage, or you can say in addition to the 14 insured perils. These are the risk up to the money of 50,000, documents such as deed and manuscripts up to 50,000, computer information and data up to 5 lakh, and personal effects of visitors, employees or directors up to 3 lakh. 3 lakh in the sense maximum 20 people and 15,000 per person. So these are 4 innovative covers available with the policy. Now policy also provides about the underinsurance. It says if the sum insured is not taken on the restatement value basis, it is underinsured. In that case, we will waive up to 15%. But if it is underinsured for more than 15% value, in that case, insured has to suffer the loss. For example, if a property is insured for 10% less value, so at the time of loss, that 10% will be deducted from the claim amount. But since this policy is providing the waiver up to the extent of 15%, in that case, that 10% under insurance will be waived and nothing will be deducted from the claim amount. But in case the under insurance is more than 15%, maybe 20% or 25% or 30%, in that case, insured has to bear the loss, because in that case, that amount will be deducted on the basis of the average clause. Average clause means the average is worked out on the basis of the sum insured taken by the insured. Say suppose sum insured should have been 5 lakh, but the policy is taken for 4 lakh, or say 5 crore. Policy is taken for 4 crore. That means only 80% value is insured. So there is a 20% in the insurance. If there is any claim, out of that 20% amount will be deducted. So this is called average clause and under insurance. Now the question is, there are certain things which are added in these policies by the IRD itself. So the coverage has been enhanced. So for example, stock held in trust. In standard fire and special peril policy, this is an add-on cover for that extra premium charged. But in these 2 policies, stock held in trust is automatically covered. Means that is inbuilt coverage. Stock held in trust means I am as an owner not having any insurable interest in that item, but still if it is in my premises, it is damaged, this will be paid by the insurance company. Say for example, a dry cleaner shop. Now in a dry cleaner shop, all the stocks of clothes, woolen clothes, blankets or whatever is there, drapers, etc., that doesn't belong to the owner. They belong to the buyers, to the customers, he is only providing the services. But in any case of any accidental fire or loss or damage, they will all claim from the dry cleaner. In such a case, this policy will provide the compensation, though the goods does not belong to the dry cleaner. This is called stock held in trust. Because of his profession, because of his business, this stock is there in his shop and that will continue around the year. So this kind of risk is covered automatically without payment of additional premium. Similarly, additions, alterations or extensions. If during the policy period, insured has made any alterations, additions or extensions, means he has incurred the extra money. In that case, the sum insured value has increased. If he is enhancing the sum insured in the policy, the risk is fully insured. If he is not intimating the insurance company, there would be underinsurance. So it is always better if any additions or alterations or extensions are made during the currency of the policy, this will be intimated to the insurance company. If there is any amount of premium because of the enhanced cost, that should be paid, difference amount. So the risk is fully covered. Insured is on the better side, safe side, because if at all there is any loss, he will lose nothing. His full loss will be settled. So now in these policies you will see slight changes are there. Say for example, as far as Sukshma Suraksha is available only up to the 5 crore. While the Laghu Uddam Suraksha policy will come into the picture only after the 5 crore, 250 crore. Say for example, sum insured is 5 crore, 10 lakh. Sukshma Uddam Suraksha policy cannot be given because the sum insured is actually at 5 crore. In that case, only Laghu Uddam Suraksha policy will be there. Or say the sum insured is 50 crore, 50 lakh. In that case, Laghu Uddam cannot be given. Then there is standard fire and special peril policy. So that is the way how the policy will be decided. Compulsory access is standardized, there cannot be any change under these two limits. Startup expenses have been picked by the AIRDA, that is 1 lakh rupees in Sukshma Udyam and 5 lakh rupees in Laghu Udyam. They cannot be changed. Floater cover is free in the Sukshma Udyam but not in the Laghu Udyam. Minimum premium is 500 plus GST and of Sukshma Udyam and 1000 plus GST of Laghu Udyam. So when you see these policies, there is a privilege that the insured at any date during the currency of the policy, if he feels the sum insured is not adequate, he can pay the difference premium and can get the sum insured increased. Normally the sum insured will increase only. Decreasing is no question. It is increasing only. So the sum insured can be increased if there is no claim of the policy. At any date during the currency of the policy, an endorsement can be passed. Compulsory access cannot be changed. The maximum liability of insurance company is restricted up to the sum insured. So sum insured should not be inadequate or less than the current replacement value. Compulsory access can differ in case of terrorism losses. Reason or the logic for that is terrorism risk is not directly dealt with by the insurance companies. There is a terrorism pool which is handling these risks, that is deciding the premium rates and the compulsory access limits. Now, IRDA, when introduced these two policies, they informed all the general insurance companies that the earlier add-on covers have been merged. Now you can file your new add-on covers that will be approved by the IRDA. So almost all the general insurance companies have filed their new add-on covers in these two policies and they are approved by the IRDA. And the add-on covers can differ company to company. Rate can differ, coverage can differ, because these are optional. No compulsion is there. They are not mandatory to buy. They are all optionals because there is an additional cost for each add-on cover. So as on date, we have got 8 add-on covers. These are installment protection up to 50,000 per EMI, claim preparation cost, loss of rent, additional expenses of rent for an alternate accommodation. Then the fifth one is accidental damage cover, involuntary betterment, expenses for loss minimization, and escalation clause. These 8 add-on covers are available with us. Whenever you are recommending this policy to any of the brokers or the corporates, you must suggest that we have got 8 add-on covers available with this policy. According to your need and choice, you can select as per your requirement. There is separate premium for that, for each one. But this is your choice. If you want, you can take all of them. If you don't need, you can ignore all of them. Now the question is, if the stock is there at the multiple locations, insured will always prefer to cover that stock under one policy and another was sum insured. If he is selecting like that, he can do it without any cost in Insured policy by giving the address of all the locations and value of all the stocks at different locations. In Insured there will be no extra payment. But in Laghu Udyam, of course, 10% extra will be paid according to the floater charges. So that floater coverage will be available in Laghu Udyam also, but on the extra payment. Now the question is, who can take this policy? The first and foremost question is whoever is having the insurable interest. But the insurable interest can also differ because of the different kind of agreements. Say for example, the insurable interest is of the owner and the entrepreneur himself. But if he is selling, then the insurable interest is transferred to the buyer. If he is giving on lease, then the insurable interest is transferred to the lessor. If he is renting it out, then the tenant has got the insurable interest. So under all these circumstances, the new person can take the insurance policy. Even the tenant can take the fire insurance policy, but not for the building. Except building, he may have the insurable interest in the stocks, furniture, pictures, plant and machineries. So he can get a policy. Nothing wrong. But in building he has not, because he is the tenant only. So he cannot get it insured. In fire policy, there is one more important aspect that is called restoration of sum insured. This restoration of sum insured means if during the policy period any claim has been settled by the insurance company, this sum insured has been reduced by that amount. So for the unexpired period of risk, insured can pay different amount of premium so that the sum insured is reinstated for that value or even for the enhanced value. By that way he will avoid the underinsurance and he will not suffer any loss on account of underinsurance. So this restoration is good thing that should be suggested in fire policy. Now every company has got a package policies. We also have number of package policies like business protection policy, Sri shopkeeper, Sri of stay, hotel and restaurant, education Sri. They are all about package policies. In package policies, two important things are there. One, section 1 is fire insurance. Section 1 is fire insurance. And that section is mandatory. So every customer has to select the section 1. When he is selecting the section 1 as fire insurance, the sum insured would be the criteria. According to that, the policy will apply. So for example, you have sold to a 5-star hotel a policy, hotel and restaurant insurance policy. So the sum insured of fire section is 6 crore. So automatically Bharat Laghu Udyam Surakshya policy will come into the picture because the Sukshma Udyam is only up to the 5 crore. So that is the way this software will automatically convert the policy according to the sum insured. Now, You have got everything related to the policy. But each proposal has to be referred to the underwriting department support office for the simple reason the market is very volatile. Pricing competition is there. Because of this pricing competition, certain proposals are lost. So, for suitable rating, the underwriter himself will evaluate the proposal form. He will give a reasonable rate quotation. That rate quotation has to be agreed by the insured. You can take his consent, and then only the policy will be issued by the underwriting office. This is for your convenience only, because the branch may not evaluate the proposal for commercial units. Branches have got the authority to issue Bharat Gira Raksha policy. That is also part of fire insurance, but that is for dwelling insurance only. That policy they can issue. These two policies, or rather three policies, Sukshma Udyam, Laghu Udyam, Standard Fire and Special Peril policy, these policies will be issued from the underwriting department support office only, because the rating will be done at the support office by the underwriter himself. So your each proposal has to be referred to the underwriting department. Now, if you have any questions, you can ask. Any doubts? Any questions? This is not in a hurry. This is a refresher, because the fire policy you have read a lot many times. Refresher is done. Still, if you have any doubts, I'll solve it. If you have no doubts, I'll send a test paper on your mail ID. You will have sufficient time. You can do it easily. But before that, if you have doubts, you can ask.